Stop scrolling. You want to see this if you want to save $15,000 or more in taxes this year. What if I told you there's a simple way to cut your tax bill in half while building massive wealth? And what if your biggest financial breakthrough was just one business structure change away? Hi everyone, Stephen Lee here. Everything you knew about business taxes is probably costing you thousands of dollars right now. I'm going to expose the secret strategy that the wealthy have been using for decades to explode their wealth, and it's simpler than you think. So if you want to stick with me to the very end, I'm going to share with you the exact framework that could transform your financial future in 2025. Here's how I went from watching business owners overpay $20,000 or more in taxes every year to helping them keep their money and build real, lasting wealth. I've been studying the tax strategies of successful business owners, and there's one structure they all use that so many small business owners completely ignore. Don't hate me, but most accountants won't tell you about this because it requires more work on their end. This is going to potentially blow your mind, so let me break it down step by step. Imagine this scenario. You're running a successful business, making $100,000 in profit. You think you're doing great, right? Wrong. Here's the painful truth. If you're operating as an LLC or a sole proprietorship, you're paying 15.3% in self-employment tax on every single dollar. That's $15,300 gone, just like that. And that's before federal taxes, state taxes, and everything else. But here's what nobody tells you about building wealth. It's not about making more money. It's about keeping more of what you make. And this is where 99% of business owners are doing it completely wrong. Here's the secret the wealthy don't want you to know, and it's called the S Corporation election. Listen up. This simple election can cut your self-employment tax in half overnight. Instead of paying $15,300 on that $100,000 of profit, you might only pay $7,650. That $7,650 back in your pocket from one strategy. And here's how it works. With an S corporation, you split your income into two parts, a reasonable salary and distribution. You only pay employment tax on the salary portion, not the distribution. So on that $100,000, you might take a $50,000 salary and a $50,000 distribution. Now you're only paying employment tax on that $50,000 instead of the full $100,000. The math is simple, but the savings are massive. And if you want hands-on help picking the right entity, setting up the right reasonable salary, maximizing deductions, and nailing your quarterly estimated taxes, starting this October, I'll be opening up limited spots to my private one-on-one business owner bootcamp, where you will walk away with a personalized tax plan. More details to come in the next few weeks. But here's where it gets really exciting. And this is the part most people miss. Those tax savings, we're not spending them, we're using them to build wealth exponentially. One big strategy that I want to share with you that the wealthy continuously use is something called the solo 401k wealth machine. Your S Corp can set up a retirement plan where you can contribute up to $70,000 per year. That's $70,000 in a tax deduction. And this is how entrepreneurs start building real wealth. You've got your business income over here, and you're building a separate wealth bucket over here. And that's something called diversification. And it's what the rich do differently and so well. Another big strategy is the reimbursement system that most accountants never set up properly. As an S corporation, you and your business are separate entities. This means your S Corp should reimburse you for any personal expenses used for the business. Your home office, car expenses, business meals, travel, health insurance, everything. So you want to set up what's called an accountable plan. It's simpler than it sounds. Your S Corp reimburses you tax-free and gets a tax deduction. It's a win-win that could save you thousands of more dollars. Now, here's why timing is everything in 2025. With the new tax law changes from the One Big Beautiful Bill, we have some massive opportunities right now. The QBI deduction is staying. That's your 20% deduction on qualified business income, QBI. Bonus depreciation is back at 100%, so you can write off equipment purchases immediately. And if you're considering an electric vehicle for your business, that $7,500 credit ends September 30th. These S Corp strategies work even better when you combine them with the new tax opportunities. The wealthy are already taking advantage. The question is, will you? I've helped many business owners implement these strategies. The ones who save $15,000, $25,000, or even $50,000 or more each and every year. The ones who wait, they keep overpaying year after year. And here's the hard truth. If you're making $50,000 or more in business income, and you're not utilizing these strategies, you're literally giving money away to the IRS that you could be keeping and investing. So don't be like the millions of business owners who are never optimizing their tax strategy. You now have the same knowledge that millionaires use to build and protect their wealth. And if this opened your eyes to what's possible, you definitely want to subscribe to the channel because I'm continuously sharing the tax strategies and wealth building secrets that most people never learn. I've also included a business owner tax checklist to ensure that you don't miss any tax deadlines. You can download the checklist below in the information section. Keep an eye out for the private one-on-one business owner bootcamp starting this October. More details to come. The S Corp election isn't just about saving taxes. It's about building the foundation for real wealth. You now know exactly what the wealthy do differently. The only question is, what are you going to do with this information? Thank you for watching, and I'll see you in the next video where I'll break down even more advanced wealth building strategies. Till next time, bye.